way up. We've seen LIC, which has moved higher. In fact, as we speak about LIC, let's get in a conversation that our colleague Yash had with the management of LIC after reporting a good set of numbers. We have R Doraiswamy, who is the CEO and Managing Director of LIC, with us.
LIC has been continuously working towards showing a positive growth in every parameter that is being measured. All of you are aware that October last year saw a change in the product circular. The master circular got implemented, and we had to, the entire industry has to respond, and we had to respond with a modification to all the existing products. Some changes had to be brought in only to become compliant with the new regulations. So that had caused a difficulty or a challenge in terms of the number of policies growth after 1st October. So that effect is still is there, but we are working very hard to see that we come back to positive growth over the corresponding period at any given point of time. Current year, we have been able to reduce the reduction in number of sales over the last year because we could not repeat those policies which were sold, the par products at a sum assured of between 1 and 2 lakhs. They are not available anymore, and hence the numbers have taken a negative growth. That is the situation. In terms of the advantages of what we are facing is that the average ticket size has gone up on all the buckets, and we are able to get some high ticket sales premium that is coming up through. So going forward in the current year, we would like to have a decent growth over the entire year's premium, whether it is top line or APE. We are likely to be showing a good positive growth is what I am looking at. I don't want to give any particular number as a guidance or anything like that, but we will be showing a good growth this current year.
Okay, I understand that no particular number, but if I could get some more hint on the number. You said the policies will be lower, but per policy size would be bigger in this year. Keeping that in mind, if we have to consider three options, low single digit growth, mid single digit growth, or high single digit growth, which cohort would you be closer to?
I would certainly love to aim at a high single digit. Now, high single digit, it can even touch a double digit. That is what I would like to certainly.
Perfect. Perfect. Now, coming to the value of new business also, despite the AP being low, retail AP being low in the first quarter, you managed to grow your VNB by about 20%, 21% in the first quarter itself. What helped you get that higher value out of business? And 21% VNB growth in the first quarter, are you confident of sustaining this thing? Because as you said, AP will pick up as the year progresses. Are you comfortable and confident of sustaining 18 to 22% of VNB growth in that range for the year?
I would not like to guess a growth in VNB percentage, but certainly we will be looking at a VNB margin which is above what we reached on 31st March 25. That is something which we are working towards that. There are, as you said, how did we manage? Or it's not a question of managing. One, there had been a change in the economic assumptions. The interest rate cycle has moved down over last year. So the RFR assumption is the one which has a impact on the VNB margin, which has brought down the VNB margin. Correct. But there are other factors. One is the expense ratio, the expenses assumption. We have had a lower expense ratio last year, and we are optimizing on the costs. So that will continue for some time. So that is one assumption which has helped in increasing our VNB margin. And third, naturally, the directional change that we brought over from 2022 of increasing the contribution of the non-par APE, that is the product mix has contributed for increase in VNB. The expense assumptions have increased our VNB margin, but the economic factors has brought down. So the net effect is a small growth in the VNB margin compared to last year.
Correct. 17.6% was the VNB margin for FY25. You're saying you'll definitely be higher than that.
We should be.
Could this actually go closer to the target which was spelled out long ago of 20% for FY26?
I think we have not given any target or guidance for VNB margin ever so far. We are working at improving our performance, improving the standing of the corporation in the Committee of Insurance Companies has been the focus of LIC, and we'll continue to work towards it. Certainly, as you said, we'll be looking at a positive increase over the last year's entire year VNB margin. Is certainly we are aspiring for.
So definitely it will be higher than 17.6.
That's what we are working for it.
Okay. Now, share of non-par, you also spoke about it. You've crossed 30% in the first quarter in terms of individual APE business, right, and the share of non-par there. The target initially was 25%, it got crossed, now it's 30%, and it's helping your VNB margins. Now, what I want to understand is, what is the target that you have for FY26 in terms of having the non-par share of individual APE business? Because that's something that you'll be able to understand and you'll be able to guide and work towards it through product launches. What is the target of non-par share?
See, in July, we have launched 2 new products which are also on the non-par bucket. Navi Jivan Shari, both on a single premium as well as multiple pay premiums has been introduced. That's also gaining a good traction right now. We will be introducing a few more products during the current year, but this time we will have we can have a combination of both non-par and par in this that we are looking at. We are also looking at, we are an insurer which has nation first as our motto. So we need to cover every person who has to be provided with life insurance cover. That's the idea. And regulator has also come up with insurance for all by 2047, which can be achieved only with a major contribution from LIC of India. So we had to look at products which will cater to the urban and the elite customer needs, as well as to those who are the ones who can be affected by any calamity. They also we have to take care of. So we may have a micro insurance product also we are looking at. We are looking at plugging creating a product portfolio which does not have any product gaps. That's what we are looking at. So we may have a par product or 1 or 2 par products also introduced. We still look at the same trajectory of increase in non-par APE share continuing for some time. It may increase from what we are currently to some more numbers, but stabilize at maybe higher than the current levels.